Imagine locking in consistent profits by perfectly timing powerful reversals, exactly when liquidity pools get swept clean inside breaker formations on your charts. But here's the common mistake most traders keep repeating. They chase every breakout blindly without grasping the deeper mechanics, which leads to repeated stop-outs and constant frustration. The hidden truth is that smart money execution runs on precise liquidity and fair value gap logic. That creates these institutional-grade setups in ways most never notice. If you're still trading without recognizing these hidden patterns, you're seriously limiting your results every single day. By the end of this video, you'll master the complete structured Gauntlet-to-Silver bullet framework for flawless entries with total clarity. Let's get started. Whenever a pool of liquidity gets taken out, notice on this chart how it lines up with a breaker structure. We see a lower high form, and then price drives down to sweep this low out into a much larger liquidity pool. But here's where most traders make a mistake. This exact liquidity point sitting below that low, inside the daily bullish fair value gap, marks the starting point of the breaker leg. If you look inside this leg closely, you will spot a fair value gap. Now watch what price does next. With this fair value gap right here, you start scanning backward. Where is the first one you hit? It is this one right here. You have to factor in the volume imbalance. This specific fair value gap is labeled inside ICT as the gauntlet. The gauntlet is not just any fair value gap, it is a very precise one. Look at this chart. Inside a bullish breaker leg, the gauntlet is always the very first sell-side imbalance you find when scanning backward from the breaker low. It has to be the lowest, the first clear buy-side inefficiency created during that downward price run. This is where smart money deliberately leaves inefficiency on the table before sweeping liquidity. When price reclaims and holds above this exact gauntlet level after the sweep, it signals the reversal is institutional grade and ready to push higher. That is why I call it laying down the gauntlet. You are challenging the market to prove the low is done. Pay attention to this level. It becomes your high probability anchor for the entire move. You will be going long on the belief that this low has cleared enough liquidity and price should now push higher toward that level where another breaker would appear. You can take this as a breaker entry, so what we are going to do is highlight that area right there. This gauntlet is a very specific fair value gap located inside the price run of a bullish breaker. It is the very lowest first sell-side imbalance by side and efficiency. Later in this video I will show you something important when we reverse this logic for bearish breakers. When the structure is bullish, and you flip it for a bearish breaker, it becomes the price leg that runs straight to the liquidity, the very first one you find going back from the low. That is the very first SIB you come to. This is exactly what you are searching for. When price trades above it and then comes back down, there is your entry. This also gives you the chance to add to the position. Price reaches it here. The body stays above it and hands you one more opportunity to add or enter if you missed it earlier. If you did not use this, I want you to think about how this drop down here fits into the upper quadrant, or rather the upper half. Isn't this right here the whole mechanism of using a SIB going into an inversion fair value gap? That is what this is. That is a silver bullet, but I am highlighting these quadrant levels here. And now I want you to focus on this price level right up here. The upper quadrant of this very specific level with the volume imbalance is here. It is also happening during a very specific time of day. I am going to zoom in closer on this. But what I want to show you here is this efficiency, so here is your silver bullet. The silver bullet is one of the most powerful institutional order flow setups you will ever trade. Focus on this chart. It forms when price displaces aggressively, sweeping liquidity and creating a clear fair value gap during that move, often tied to a sell side or buy side efficiency. This gap becomes the inversion fair value gap, or the key inefficiency zone that smart money reclaims after the sweep. Look closely at how the bodies hold above or below it while wicks test lower liquidity. When price reclaims this exact silver bullet level with momentum, it signals the reversal is locked in institutionally, delivering that high probability rip higher or lower. This is why it is called the silver bullet. It cuts through noise for precise, explosive entries. Pay attention here, this level anchors the entire continuation, the efficiency here. That is your silver bullet, and this is the institutional order entry drill right there. And that price running higher tells you we are moving higher. But this candlestick premium wick, we are going to do the same thing right here. And we are going to take the levels of the high. The is the upper quadrant, consequent encroachment, lower quadrant, and the low, which is the close of the candlestick right there. And we are going to project them forward. So if you take those levels and project them forward, you can see those specific levels here. And now inside this range from this candlestick's close to this candlestick's run higher. We are going to the 15-second chart, inside this little range here. This is all you need once you know you are on the right side. That means the market has done enough work down here during the macro. So at 9:50 to 10:10, that is what this is delineating here. Market drips down into the daily bullish fair value gap. Remember that area on the daily chart we started with. Then it rips higher. We have a shift in market structure here. Silver bullet institutional order entry drill. Then we have this wick in here. We have the gauntlet. We have the turtle soup low to low. There is one detail most traders completely miss that we will come back to in a moment. You see the shift in market structure. We have this wick's consequent encroachment. Pay attention to what happens next. See how all these details are converging. It is a confluence of multiple factors suggesting the move is complete. It is going to go higher. So let us look inside this little range here on a 15-second chart. This is that 15-second area right here. And before I go into any more detail here, I want to show you exactly what you really see on the 15-second chart. Because as I mentioned, every time we talk about executions, you have to be looking at a 15-second chart also. If you look over here, when that drop happened at the 9:30 candle, I am entering right inside that. As a reclaimed bullish fair value gap with relative equal lows, it just stabbed below that. And then when we are here, I am going long while we are still inside that. And the stop loss can sit right below there. And this right here, this wick, you can break it down into quadrants. And the stop loss has to be at least below the low and where it comes down to about the lower quadrant. And then it rips higher and reaches my target up here, just as I mentioned when we were on the 1-minute chart. But over here on the 15-second chart, you can see that range has a fair value gap and volume imbalance. The market trades up, the bodies are staying inside that range and then drops down. The bodies stay inside the lower quadrant. Wicks go down into the volume imbalance, but the bodies are staying inside of that buy-side balance sell-side efficiency. And then it rips higher for this pool of liquidity right there. That's it, traders. Thank you for watching. I hope this explanation delivered greater clarity and practical insight that you can apply to your own trading. Make sure to subscribe and turn on notifications so you never miss future content. Leave your questions and suggestions in the comments section below. Let us know which topics you would like to see covered next. We truly appreciate your support, and we look forward to seeing you in the next episode.